I do think you should at least pitch to your tribe early. And I understand that your tribe may not have capital to invest in your project, but it's important that your tribe figures out how to support you. And it's being very clear that you need their support. I don't care if it's a tweet. I don't care if it's an IG post. I don't care what it is. Like, I'm part of this tribe, and I think it's important to support each other. I think the second piece are the grants and the accelerators around the country. There is an accelerator for you. I promise it. And there are foundations now that are giving capital, like the New Voices Family Foundation from Richard Lou Dennis. I mean, they're granting, I think they host a number of pitch competitions. There's accelerators, everything from the Target accelerator to the Sephora accelerator to there's local city accelerators, right? There's a lot of resources around in the beginning. I think those are the second piece. I think the third is like, if you're really serious about it, you need to sacrifice something.
You're listening to the Black to Business Podcast, an educational podcast providing Black entrepreneurs with the tools and resources to start and grow their businesses. We chat with vetted Black entrepreneurs, thought leaders, and business owners as they provide tips and resources to help take your business to the next level. I'm your host, Monique T. Marshall. Welcome back to another episode of the Black to Business Podcast. I'm your host, Monique T. Marshall. And today, to continue our Black Men Who Lead series, we have a transformative conversation lined up for you. So if you're a Black entrepreneur, you know that the challenges of securing funding for business can often feel like an insurmountable barrier. Whether you're in tech, retail, services, or any other industry, the struggle is real and it is widespread. But what if I told you that there are alternative paths to success? Ways to fuel your dreams without solely relying on traditional venture capital. Our guest today is none other than Rodney Williams, the co-founder of Solo Funds. He's raised over $80 million in the tech world, but he's here to share the secrets behind alternative funding pathways for Black-owned businesses. Rodney's journey isn't just inspiring, it's truly a masterclass in resourcefulness. He's utilized personal savings, credit cards, accelerator, and smaller socially minded investors to build impactful ventures. And now he's revealing how he's built a sustainable business while minimizing the dependency on large capital raises. So we're delving deep into Rodney's strategies, learning about innovative financing options, and discussing the importance of pitching with confidence and honesty. Plus, Rodney will share how Solo Funds is revolutionizing community finance by providing nearly $1,500,000 back into communities. This episode is so packed with actionable advice, so if you're ready to explore those alternative funding paths and really foster community wealth, this is one conversation that you don't want to miss. So let's dive in. Rodney, welcome to the Black to Business Podcast. Such a treat to have you here. Welcome to the show.
Thank you for having me.
Of course. So we are talking all about beyond venture capital, some alternative funding paths for Black-owned businesses today. And I want to start by talking about your journey because you've had a very successful journey. So if you could just share a little bit about your background and what led you to co-found Solo Funds.
Great. Number one, it's a pleasure to be here. Rodney Williams, co-founder of Solo Funds, current president. And prior to Solo, I co-founded a startup that's still active called Listener. I co-founded a beauty company that I ultimately sold called My Johnson & Company. And I'm a all-around entrepreneur. You know, in terms of my career, I actually started at Procter & Gamble. It's a large CPG company. You know, I really wanted to go out on my own and make a difference, which really just allowed me to start Listener. I think all in all, I've probably raised somewhere north of $80 million for the companies that I have founded, and mostly in tech. I would tell you that, you know, started at this point in time, I guess 15 years ago is when I actually entered into tech and have been embarking on that journey. I will tell you, tough journey, long journey, but you know, I think I'm in it for life. So, and I'm here to answer all the questions.
Yeah, well, that is a great story. Yes, thank you for sharing that. And as you mentioned, like you said, you've raised over $80 million, but I want to talk about your journey in securing funding for your ventures, and particularly with your past experience and also solo funds, because one of the things we noticed and we wanted to talk about today is the alternative funding paths, but your journey has been quite unique. So can you share a little bit about your journey in securing funding?
Yeah, there's a lot of ways to secure funding. The way I approach funding is, some of the traditional ways, maybe it's like a bank or a bank loan, or maybe it's your own savings. A lot of that capital is present. There are a lot of grants that are also present. There are also a lot of like small business incubators and accelerators around the country. I like to think of the capital that's required to get your idea going is different. And is different than the capital that once you're like trying to grow your business. With that said, I think there are more resources for that beginning capital than ever before, right? There's a ton of grants and partnerships and like pitch competitions, and whether you're a beauty company or a tech company or, women-led or Black-led or minority-led, I think there's just a lot of opportunity currently, more so than there ever was before. My journey was a little bit like that. I definitely depleted my savings, used my credit cards, but I joined a number of accelerators around the country that would help me with resources as well as funding. Those accelerators, I would not have started if it wasn't for those accelerators.
Yeah, I love that you mentioned that. And one of the things I love that you say, and then your team also said, is that you've reached this success because you haven't relied solely on VC funding. And can you share some insights into why that was your strategy and important for you?
Well, I think as a founder, the number one strategy is to create a sustainable business. And that means that the dependency on raising significant amounts of capital is lowered because you're actually making money, right? So for us, especially as solo funds, number one, you decide to go into tech, and you can pick industries that are being well-funded industries, or you can pick industries that are going to make the biggest impact to the community that you're a part of. And for me and for us, that was, financial inclusion, that was access to capital, and that was, providing a yield. So there wasn't a lot of venture capital funding for our industry, right? I always say, newsflash, venture capitalists aren't in the business of social impact. They're in the business of making a return, right? So unfortunately, we didn't have access to a lot of venture capital funding, and we had to rely on creating a good business, and also attract smaller investors that really, really believed in what we were building. And those are the two ways in which we did it. And alongside, solo funds have probably participated in about 10 different accelerators. I would say if you ever saw us in a pitch competition, I hope you weren't in it, because we most likely won.
I know that's right.
And I'm looking at some pitch competitions right now. I think we need to go back to the board a couple times. But we're going to go out and figure this thing out no matter what.
Love that. And so speaking of that, people are like, okay, you've gotten over $80 million or you've raised. I need to listen to him. So for you, what do you think made you all stand out in terms of being able to win those competitions?
Well, I think you have to, number one, know your stuff, right? And that's just the confidence in your business model, who you serve, why you serve them, and the impact you're going to go out and make. And, I think you got to be the world's greatest expert at that. And you got to be able to convey that confidence. I think that's super important.
Yeah.
And whether, my goal, whether I or we gain the investment, is to win the investor. Like, you don't have to like us. You don't even got to believe in the business, but you're going to walk away thinking that this founder and this company may work. And if it does, oh, like this is going to be a big deal. Like, so my goal is to win them as an advocate, as a friend, as someone that's going to go out and spread good news about the things that they heard. I think that's important. I think structurally though, like if you're a founder, you got a company, like the things I need you to take away is that you have to know your business. It has to be a big enough opportunity, meaning like if you think you're swinging too small, I guarantee you are. Like nobody wants to invest in a little opportunity. We want a big opportunity. Like we want things that are going to have the potential to make a return, a substantial return. So I think those are big things. And I also say like every investor isn't equal. You need to talk to the right investors. And then my final thing is investors are not your friends. They can grow to be your partners. They can grow to be your advocates, but they're not your friends. I hear so much feedback from, entrepreneurs that, I don't trust that investor. And I'm always like, well, why do you want to trust them? I don't think they're even in the trustworthy category. They have a motive and their intentions are clear. Their intentions are to make money from you, and just in that inherent thinking, you should put them in that category and you should never let them leave that category. It's really important. They're a stakeholder, they're a shareholder that's in it for the returns.
That's good stuff. And so I love that you've mentioned some of the ways that people can fund their businesses. And because I think that many entrepreneurs view VC funding as this ultimate goal. So there seems to be this misconception around this. So could you kind of elaborate on why VC funding isn't always the best solution and who should consider alternative funding paths?
Yeah, I mean, I think as a founder, you should be considering alternative paths all the time. As a founder, your job is to keep it alive, keep it going. And that means wherever funding comes, the way you are analyzing whether that funding is a good option for you is the cost of it, which includes the true cost, meaning is it equity? Is it an interest rate because it's a loan? Is it a grant? Is it whatever the case may be? And then you should have as many options as you possibly can drum up. I think if I look at the state of Black business, Black venture business, we should be now pushing to get the exits like a few of my friends. The goal shouldn't be the fundraising announcement. The goal should to do with, Mael and Monique and Melvin did, or Beatrice Dixon with Honeypot, or even Richard Lou Dennis with Sundial. The goal should be to exit and create value for our communities. These fundraising announcements are great, but that's not the goal, I think, anymore. We need to move the goalposts. The goalposts should be more aligned to our counterparts, because our counterparts, their goal is not to fundraise. Their goal is to exit. Let's try to get the same goal. I think we're deserving of that.
So, this is the Black to Business podcast, and we like to break it down. So, people are like, okay, well, some people had some thoughts around that as far as, well, what about holding on generational wealth? It feels like selling out. Like, what are your thoughts on that?
Generational wealth is created with capital. You have to have substantial capital, right? That's what creates generational wealth. The generational wealth can be created from a company. It can be, but you have to, at some point in time, accumulate a substantial amount of cash to sustain generational wealth. You have to not just leaving a business. I give you an example.
Okay.
I can create a business that does $20 million a year. And then I can get old, and then I can leave it to my son, who doesn't want to do anything with finance, but is the world's greatest artist. And he may squander the company. Where's the generational wealth?
Yes.
All right. Where it's a better option which I think is a better option because of this is like, I'm all about data.
Yeah.
Our generational wealth as Black people is worse than it's ever been in the history of of measuring it. And it's because even though there's more Black ownership, there's no exits, there's no cash. And our counterparts are exiting their companies, and they're exiting it multiple times in their lifetime. So what I'm ultimately trying to communicate is the alternative would be that same $20 million of business a year. I could, what if that exited for $100 million of cash? I then create trust funds and foundations for my family, where for the rest of my existence, my last name's existence, it's going to distribute the descendants of my family a $200,000 a year salary forever. Meaning, and then all of the assets that I have accumulated are also owned by the trust. That means the homes, the cars, my family will always have a base. That's generational wealth. So it doesn't matter if I may have a offspring that may want to do something different. I just think it's like almost inconsiderate to think that my descendants will want to do what I do.
Yeah.
But you know what I do want? I want the money to be there. So if that person wants to be an artist, or that person wants to create a new car or invent a new project, that my family can be their number one investor, like our counterparts are. When our counterparts wants to start a business, they bring their aunts and uncles around in the living room and they say, I want to start a business. And their initial capital is raised by their immediate family. That's because their family has generated wealth.
Yeah.
So yeah, I just think we don't know what that means yet. We're in the infancy of understanding what generational wealth really means. And there's a lot of misconceptions going around about what it means. But what I do know is the impact that those three families that I just mentioned to you are going to make on Black America and just America in general is going to be significantly greater than any other owned business that's owned by a Black person right now. I mean, their impact is going to be huge.
Definitely. And I totally agree with everything you said. I have to play the devil's advocate. And I know you meant it because I heard you beating on the desk. I'm like, Rodney means what he's saying right now.
Oh boy, I guess so.
Yes. So that is so key, but I love that. And now I want to dive into some of those, just exploring alternative funding paths for Black owned businesses a little bit more. So if you had to say, outside of VC, what are the alternative funding paths that you would list?
Yeah, I think I will always say friends and family. I do think you should at least pitch to your tribe early. And I understand that your tribe may not have capital to invest in your project, but it's important that your tribe figures out how to support you. And it's being very clear that you need their support. I don't care if it's a tweet. I don't care if it's an IG post. I don't care what it is. Like, I'm part of this tribe, and I think it's important to support each other. I think the second piece are the grants and the accelerators around the country. There is an accelerator for you. I promise it. And there are foundations now that are giving capital, like the New Voices Family Foundation from Richard Lou Dennis. I mean, they're granting, I think they host a number of pitch competitions. There's accelerators, everything from the Target accelerator to the Sephora accelerator to there's local city accelerators, right? There's a lot of resources around in the beginning. I think those are the second piece. I think the third is if you're really serious about it, you need to sacrifice something. And what I mean is if you're so serious about your idea, then you need to figure out how your savings can make an impact. Or maybe you cut down your cost of living and move back home with mom while you figure out your project. I'm not saying go out and make an uneducated choice. I'm just saying, if it's that big of a dream, you should go for it. And those are the three things that I would suggest in the beginning for capitalization and becoming a sustainable business. I know there are some incredible entrepreneurs out, and I don't want to, maybe I should. I don't know if you guys know the founder of Undefined Beauty.
Have to have him on the podcast.
Yes, and I can make that introduction. But let me tell you, it's a great beauty company. It's they're national retail, and she is almost like a one-man show. Wow. She has created a sustainable business. Her business it's like profitable. And she didn't do it with a lot of venture capital funding. She did it with some, being very, very methodical with her choices and creating a business. So there's a lot of value in creating a business that can sustain itself. You know what I mean? And I think that's my push. I think that's the push. I guarantee you, just like her, there's a ton of venture capitalists that want to give her funding now. She doesn't need them. Yeah. Everybody wants to fund a business who doesn't need capital.
Yes, that is so true. I just heard somebody else just told me that last week too.
Yeah. That bothers me, like, because I'm a founder and I want to fight back to the system. I understand it.
You understand it. And I love one of the things you said is sacrifice. And of course, this is entrepreneurs that are listening. And for you, what does sacrifice look like?
Yeah. Sometimes I probably sacrifice too much. Because I'm almost willing to sacrifice it all.
That's deep.
So I don't think there's even a wall for me. It's because I saw my family, and I actually still continue to see my family work really, really hard. My mom and dad were immigrants, growing up with multiple jobs, trying to make ends meet. They're not doctors or lawyers. They didn't go to college. We have never been to Martha's Vineyard. And I don't think they gave me the luxury to quit or to not sacrifice it all. They had to sacrifice it all to just put food on the table.
Yeah.
I'm just trying to sacrifice it all so I can turn $100 million business into a $100 billion business. And for that, I'm willing to risk more than they ever thought, and again, I'm going to keep my integrity. I'm going to keep my morals. But I have sacrificed, friendships, relationships, time, family, a lot of things that were an active choice because of how much I do want to create a value for my generations. I'm very clear on the opportunity cost of those decisions.
That is powerful. That is truly powerful. And I'm pretty sure a lot of people can resonate with that. So yes, thank you for sharing that. And Rodney, what are some of those common misconceptions about funding for Black-owned businesses, you think?
Common misconceptions. I don't know. I think everyone got the real. It's hard. It's difficult. You most likely are not going to get it. This world is not stacked up for you. But what misconceptions I can tell you? I can tell you the misconception that your business isn't great. The misconception that you're not good enough. The misconception that you're doing something wrong. Those are all misconceptions. The misconception of our leaders who have exited, that they're selling out. No, they're selling up. Like, they're the first to do it. Let's all go down and visit a graveyard that I think about sometimes. In the 70s in Chicago, there were a ton of Black beauty companies. I don't know if you guys are like Soft Sheen or Douglas.
Yes.
And like media companies like Jet and all them. But let's go visit the graveyard of them all. Where are they now? It's funny how, instead of them working together, instead of them figuring out how to sell up, they were segmented in their approach. And eventually they couldn't fight against the opposing companies. And eventually they were squashed. Let's not do that again. History has told us that. I don't think that works well. Mm-hmm. So let's collaborate. There's no competition if we're a Black business. It doesn't exist. We're too tiny. We have a competitor that's much bigger, much more capitalized, much more influential. It doesn't matter if me and you both have the same lotion. I guarantee you there's a bigger lotion out there. We're not fighting for the same shelf space. We together need to think about that. And I think collaboration, understanding that we need to sell up, understanding that we only improve our situation together. These are the things that I think are misconceptions or things we need to start teaching each other.
Mm-hmm. Definitely agree. And so now that we've discussed some of those alternative funding paths, I want to talk about where we are currently as Black-owned businesses when it comes to funding. So can you share some of the insights on the current state of funding for Black-owned businesses and some of those challenges with traditional funding?
Yeah, well, I definitely know, according to the latest reports, venture capital funding for Black businesses is at an all-time low. Mm-hmm. You know, I hope you got all your money that came out of, George Floyd and some of the things that happened during COVID. But that's all gone. And we're kind of back to the reality that venture capitalists aren't social investors. They're that's just not what they do. So it's today it's really bad. So today you're going to have to do a lot more with a lot less. You're going to have to be scrappy. You're going to have to leverage alternative resources, go to them banks, go to them grants, and do what you can. You're going to have to think about it very, very differently. And you should only do businesses that have the potential to sustain themselves in a very manageable period of time. If it's going to take too long, that's not probably a good business in this current market.
Mm. And speaking of that, like it's not like it was, can you talk about how this lack of access to funding is actually impacting the growth of sustainability for Black-owned businesses?
Yeah, I mean, businesses are dying left and right, and they're challenged and they're figuring it out. But for the most part, the good ones are having trouble growing. Mm-hmm. So like they're sustaining themselves, but they can't grow because they don't have money to invest in the future. So the growth of some of these businesses are limited right now. And then the ones that are in the idea stage or concept stage, it's probably more competitive than ever before because there are a lot of quote unquote Black-led startups or Black-led new ideas, and everyone's kind of fighting from the same limited dollars. So it's more competition today than ever before, which the flip side of that is that we should get a lot more credible businesses and that mindset. But the state is technically more dire than ever before. But let's talk about it. It's nothing that we haven't experienced ever before. Right. Like to me, it was as Black to business, it's back to business.
That's the bar.
It's just like what we talking about. Like what happened in 2020, 2021, and 2022 was not the norm. We're back to the normal process of this. To do what we do, we're marginalized, we're segmented, it's difficult. We are expected to do more. We always have. So let's just do what we have always done. And that to me, that is outperform.
So good. And so now that we know, we just made it plain where we're at currently, let's talk about how we can fix it. So I love the work that you're doing at Solo Funds, and it's all about community. So can you explain this concept of community finance platforms and how they benefit us?
Yeah. Community finance is a concept that is actually widespread in minority communities. And my mom growing up Caribbean, it was called partner. There were like savings clubs where she would drop off $100 every week,
Mm-hmm.
and like they would hold it, and it was like a pool. And then if you need it, you would get it more. There's churches that do this. And around the world, in Africa, the Caribbean, South America, Mexico, Southeast Asia, community finance is actually a huge part of the local economy, where they tap into community when they need a loan, and they tap into each other. Now, community finance as an industry, there's an alternative name called microfinance, as an industry, has not been embraced by the United States. It has not been embraced, meaning that the United States hasn't created regulatory frameworks or even an understanding of community finance or microfinance. It's almost a bad word for an American to need $100.
Right.
Oh my God. No, that can't be. You know, and that's the lies that I think I have a problem with. So for us, with Solo, we're trying to bring to the world, honestly, community finance backed by technology and backed by the world's best technology, so that we can start to power access to capital by the community. And the community can then reap the benefits of the returns of that capital and get the institution out the way. That's our goal with community finance, right? Today, our approach, and we're fighting a battle with a loan that's a few $100s. In the future, it will be a few $1,000s. And if it's up to myself and my co-founder, we're going to keep pushing that, where community finance can power auto loans and home mortgages. I think community finance is the future. And that's our goal. And it's going to be a tough goal. I promise. We're facing a lot of opposition. But for every institution who has failed you, I have a bet that a person would make a better choice as it relates to backing you, a person. And I think also you would be more compelled to make that person whole. And that's the general concept of community finance.
I see why you win these pitch conversations, Rodney. You just made that like, yes. It's like a commercial. I love it. And so if you could talk a little bit about how Solo funds work.
Yes. So the way Solo funds works today is there's no approval or denial process. There are no mandatory fees. You download the app. You connect your bank account. You can request how much you want, up to the max. What's the reason you need it for, and what you're willing to pay. What you're willing to pay is voluntary, meaning you self-select the donation. We call it a donation because you don't have to do it. It's for the company. And then the tip, which the tip goes to the community member. It doesn't go to the company. And then you post this request. So what it would look like if you were to open the app today, it would say, Tommy from Florida, it needs $200 for a car tire or a car repair. And he's willing to donate the Solo $5, and he's willing to tip $7. And he's going to pay it back 2 weeks. That's it. As a lending member, a community member, you can decide to fund that loan. And what we have done as a platform, number one, we've done this more than 1 million times. We have nearly distributed nearly $500 million back into communities. Wow. But most importantly, the lenders on our platform, which 82% of them also live in underserved zip codes, that group has reaped returns that are better than any other industry since 2020. So they have had returns from lending on Solo over 20%. Now, let's put that in perspective. On one side, you have a person who is working, just needs a couple $100s because they got a flat tire, and he can't go to his Bank of America and say, "Can I need $200?" He don't want to go to his mom because that's awkward. He doesn't even want to tell anybody. He just needs a quick help. And for him, he gets capital when he needs it. And now for the lending member, the auto mechanic manager who only has $2,000 of savings, but he's been lending to his community. And at the end of the year, that $2,000 is now $2,400. And that mechanic can now take that $400 and pay for Christmas. More importantly, his wealth is growing by 20% that year. All the wealth he knows.
Right.
So that's the impact that we're making. That's a bit dangerous. Now let's think about that traditionally. Traditionally, you go get this loan from a credit card or a payday loan or something, and you are paying interest. And that interest is leaving your community. It's not growing the wealth of anybody you know.
Mm-hmm.
That's the problem with our wealth gap. Our wealth gap continues to get wider because for many reasons, but one of the reasons it does is because us as Black people, all of the fees that we pay is income and returns for the wealthy. Those income and returns don't ever get back to us in no capacity. So that's the community finance not just comes from the community has to reap the benefits of it. And that's what makes it community finance.
Love that. And Rodney, do you have any success, because this is so wonderful for entrepreneurs, like how this has worked for those who are entrepreneurs who have successfully utilized the platform or community funding?
Oh man, I always tell this story. You can look her up. She's a great founder. Her name is Brittany. She started a company called Shop Latina X, and she raised a couple $1 million. She's a successful entrepreneur, but she would tell you about a story of when she was starting out that company, and she was in accelerators. She drove Ubers, and she used Solo over a period of 6 to 8 months, every couple of weeks for a couple $100 to make ends meet. There was no other platform that would give her a loan when she didn't really have a job and all she was doing was driving an Uber. She's now a very, 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 very successful entrepreneur.
That's a beautiful story. Love that. And what would you say are some of the advantages? Well, we've kind of spoken about the advantages and disadvantages of outside of community finance and platforms compared to maybe traditional sources.
Yeah, I mean, I'm a very harsh critic. So, community finance kind of sits outside of the traditional system. So I think one of the disadvantages is that today it doesn't build your credit, but it also doesn't hurt your credit.
Right.
So I think they cancel each other out. But I think that's a disadvantage as a whole, because I do think we want to figure out how community finance can improve your traditional credit scoring. I think that cost is an advantage. From a total cost perspective, this is a significantly cheaper product. And it's very simple. Most loan products, the longer you have a balance, the more interest you pay. So like a $100 loan, if you take 5 years to pay it, it ends up being $500. Solo, whatever you self-select. Remember, I gave that little equation on $5 and $7. So a total of $12. Whether you pay it a month from now or you pay it 2 years from now, it's still just $12. So it doesn't disproportionately hurt your position later on. So from a cost perspective, we have an advantage. And I think the other advantage is that the group that's making money is also your neighbor. I think that's an advantage. Some other disadvantages, though, is that we're the only company in the United States that's ever reached this scale. We're the first to ever do it at this size. And unfortunately, we only have a limited loan product, which is this product for a few $100s. I think that our goal is to do a lot more. But right now, we haven't had the opportunity to release those products. But that is a disadvantage for the group that we serve.
And I want to talk about the financial autonomy of all of this. And one of the things you kind of mentioned earlier is this sense of community and support. So how, in what ways can we as Black entrepreneurs collaborate and support each other while we're navigating this financial landscape?
Yeah, I think that's one of the aspects that I do think is powerful in terms of supporting Black business and buying Black products and supporting entrepreneurs. I just want to say that support it goes a lot of ways. Support is liking an Instagram post and following a person. Support is giving words of encouragement. Support is not looking at a competitor as a competitor. Support is also not being jealous when we see others like us do well. And I think support can look like many ways. I think also, I do think we should start encouraging investing from each other. Like this concept of I'm going to do it by myself, I think is weird. It's weird. We don't love by ourselves. We don't make families by ourselves. We can't be an employee by ourselves. We can't do anything but be born and die by ourselves. And both of those things feel weird.
Absolutely.
So why would I want to have a successful business by myself? I don't think it actually, so I think we should do more with each other. So invest in each other, figure out a way to invest in each other. If you have an extra $5,000, instead of going on that family vacation, how about find a friend and say, I'll help start your business this year. How about you do that? In my early days, I used to get really frustrated talking to certain wealthy entertainers about investing in my projects because they could go out that weekend and spend $25,000 on bottle service. And I was only asking for $10,000.
Right.
This message is for you too. You know what I'm saying? Maybe you don't have to go get bottle service this weekend, bro.
Yeah.
And just pick somebody and bless them. And it's not philanthropy. Be a real investor. Sign the paperwork. Do the stuff. And let's see what happens.
And Rodney, we have lots of early stage entrepreneurs that listen to the podcast. So for somebody who is starting out on their journey, what advice would you give them in terms of where to start when seeking funding for their businesses? Yeah,
I think you got to start with yourself. I think you got to be honest with what it's going to take. I think you got to become the smartest in the room. You don't have to know everything, but you have to be very, very aware of what you don't know. And I think the second piece is you got to attract a team or attract some type of support. I think it's just a personal, it's just really good for you to realize that you have turned someone into an advocate or you turned someone into someone who wants to be helpful. And then I think it's the third is getting into the mindset of learning and that you can always be wrong and you always will be. I think if you ever think that you know it all, eventually, I don't think you'll be put in the position to learn what you need to learn to get out of it. If that was the case, everybody would have businesses that would be successful. Everybody would be wealthy and everybody would have all the answers. And that's clearly not true. So let's learn. Those are the three things that I would tell people in the beginning. Yeah.
That's good advice. And so this has been amazing. I want to end off by talking about the work that you're doing and continue to support. So we talked about Solo Funds. So how can listeners connect with Solo Funds and explore the opportunities? Is it they just go to the website and get started? How does it work?
Yeah, go to solofunds.com. Check us out. Become a lender, become a borrower if you need be. Go follow us on Instagram if you're not ready. Go like a picture. Please support. This is the largest community finance platform in the United States. And this is definitely one of the largest in the world. And it's started by a group that looks just like you. So at minimum, that's the only requirement for support. I think that we have a lot of challenges ahead of us, regulatory wise, against an industry that does not want us to exist. So that's why support in us means many, 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 many things, and we welcome it.
Yes. And Rodney, any tools or resources that have really helped you on your entrepreneurial journey that you can share with the audience?
Yeah, I mean, well, I think it's important to follow entrepreneurs that you respect and you admire, and learn from them. I think that I learned a lot, to be honest, researching Jeff Bezos, Richard Lou Dennis, Beatrice Dixon, Monique and Melvin, to others. I've learned a lot, and I think you need to do that. You need to be a student of people. Just, I get we admire like our entertainers, but like we should admire our business people. And there should be business owners at every level that you admire. Like there's a woman that owns a nail salon that I admire. There's a friend that owns a consultant firm that I admire, because there's things that they have that I don't have, and I want to learn it.
Yes. And so work-life imbalance is the theme of our Black Men Who Lead initiative this year. So how are these elements represented in your entrepreneurial journey?
Work-life balance, that's tough.
Yes.
I don't know if it can exist as an entrepreneur, but I can try. I think it does, but I think it's different. I think it's more so about mental health. Like up until this period of time, I think our society has disregarded the mental health, especially of Black men. We have been taught to be providers, protectors. We have been taught to not necessarily honor our emotions or honor our insecurities. Only been taught to honor our ambitions. And that has taken a toll. And as an entrepreneur, it takes a heavy toll, because you may not make all of the decisions, the best decisions generationally, if you are expected to show up today a certain way. And so, I think, more so than ever before, work-life balance is about like honoring those things that society has told us we weren't worthy of being able to honor, like our insecurities, our emotions, what we're bad at, and where we need help, and being in that, there's confidence in knowing what you're bad at. I can't describe it. It's a very, it's probably the most powerful confidence that you can have, to know that you wear everything you're bad at on your sleeve, and I'm still going to show up, and I'm most likely going to beat you.
That's right.
There's something dangerous about that, and I like it.
Yes, we love it. And my final question is, what does it mean to you to be Black in business?
Yeah, I think what it means to be Black in business, I think the biggest thing that it means is that it means that I owe a level of transparency and collaboration with businesses that are like me. I owe it. It doesn't mean I serve Black consumers. It doesn't mean that like I am not a venture company. It doesn't mean that I'm not a technologist. It doesn't mean that I'm a sellout. It does mean that I owe businesses that are like me transparency and collaboration. We owe it to each other to collaborate. I do believe that. And that's what it means to be a Black business. It means that we are in this together. It's weird to me. And I always talk about things that are weird to me. It's weird to me when Black businesses talk negatively about other Black businesses.
Talk about that. That is true.
I don't understand it. I don't care if it's a Black media company. I don't care. I don't understand why you would report negatively about another Black business when you haven't realized that talking negatively, every time there's a Black person that goes to jail or a Black hero that is taken off of their pedestal, it makes us look bad as Black people. Together, we look like the negative perception that they want us to look like. And then they kind of like, that's the perception of all of them, quote unquote. So that's a problem for me. And that's weird to me. It's almost like you self-hate yourself, or you self-hate what you represent. And that's why it's something that you owe. You owe that collaboration and that transparency. I didn't say you gotta walk around and advocate, but you owe Black businesses a level of collaboration which doesn't hurt them. I just said we should just never hurt anything that looks like us.
That's a word. That is a word. I totally agree. Totally agree. Rodney, this has been amazing. We've gotten all the things and you just poured into us. So I want to thank you so much for the work that you are doing, the sacrifices that you make and continue to make, and the representation that you are serving as, and a true leader and legacy builder. So thank you so much for being on the Black to Business podcast.
Oh man, thank you for having me. And it's been a pleasure. And I hope everyone has a great summer.
And that's a wrap on this incredible episode with Rodney Williams, the co-founder of Solo Funds. We dove deep into his tech journey, spanning over 15 years, and explored all kinds of funny options for us as Black-owned businesses, from traditional routes to grants to small business incubators and accelerators. And I love the fact that Rodney didn't hold back on sharing the risks that he took, like maxing out his savings and using credit cards to build his ventures. As you know, it can get real, but it can also pay off. So we also discussed the strategies to stand out and win competitions, the reality of creating generational wealth with a company, and the sacrifices required to truly see your business succeed. Plus, we learned how community financing can be a game changer for Black-owned businesses. And I want to thank you so much for being a part of the Black to Business family. So for more resources in this episode and to learn more about Rodney and Solo Funds, just visit blacktobusiness.com/204. In the meantime, I'll see you back here next week, same time, same place. Later.